Hey everyone, welcome back to the Deep Dive, the show where we plunge headfirst into the topics you're most curious about. And today, we're tackling Bitcoin. Specifically, its recent nosedive below $90,000, a three-month low. As of February 25th, 2025, we've got a mountain of expert analysis to sort through, so let's dive right in. Oh, and before we get started, don't forget to hit that subscribe button and join our awesome community here on the Radio Podcaster Network. You won't want to miss out on all the deep dives we have coming your way. Okay, back to Bitcoin. Even with this dip, some experts are predicting it could reach $200,000 this year. It's a bit of a head scratcher, right? To help us unpack this, we have expert speaker joining us today who can shed some light on what's happening behind the scenes. Well, it's really interesting to see these contrasting viewpoints happening at the same time. On the one hand, you have people like Cathie Wood, the CEO of ARK Invest, who sees Bitcoin as part of a much bigger picture, a technological revolution, really. So it's not just about the price of Bitcoin today, but the potential of the technology behind it. It's a long game. Right. Exactly. She's betting on widespread adoption with institutions, major banks, hedge funds, even governments integrating blockchain into their systems. It's called institutional adoption, and it's already happening. Hold on, can we break that down a bit? What does this institutional adoption actually look like in practice? Well, imagine a world where banks use blockchain to process international transactions, making them faster and cheaper, or supply chains that are completely transparent and more efficient because of blockchain's tracking capabilities. As more of these institutions jump in, the demand for Bitcoin being the most established blockchain network could really take off. I see, so it's like investing in the picks and shovels during a gold rush, not just the gold itself. That's a great analogy. Now, on the other side, you have Arthur Hayes, co-founder of BitMEX. He's taking a more macroeconomic view. He thinks the global economy is heading for some pretty big changes. Things like rising inflation, geopolitical instability, distrust in traditional institutions. That does sound a bit unsettling. Where does Bitcoin fit into all of this? Hayes sees Bitcoin as kind of a safe haven in this turbulent economic sea. Because it's decentralized, meaning no single government or bank controls it and its supply is limited, it could act as a hedge against inflation and economic uncertainty. Interesting. So you're saying he's betting on uncertainty actually driving Bitcoin adoption? He is. He's even predicting a crypto peak as early as March 2025. Wow, March. That's just around the corner. Yeah, he's got a lot of faith in those macroeconomic forces. But if the overall mood is so uncertain, why is Bitcoin taking such a hit right now? Well, that's where things get really interesting. Remember Donald Trump returned to office in January? Oh yeah, how could we forget? Well, it turns out his unpredictable policies, especially around tariffs, are making investors nervous, not just in crypto. The whole market is feeling jittery. So we've got global uncertainty and domestic policy shaking things up. No wonder people are a bit hesitant to dive into riskier assets, even if they believe in the long-term potential. Exactly. And then there's that recent $1.5 billion hack of the Bybit exchange in Dubai. Oh, wow, I hadn't heard about that. Yeah, it was big news. While Bitcoin wasn't directly stolen, this kind of breach shakes confidence in the entire crypto space. Makes sense. It's like a domino effect. One big security breach, even if it's not directly related, can ripple through the entire market and impact sentiment. Speaking of sentiment, it seems like Bitcoin is mirroring the tech sector lately. The NASDAQ has been down to suggesting a broader shift away from riskier investments. That's right. Bitcoin and tech stocks, once seen as completely separate, are now moving in sync. It really highlights how interconnected our financial systems are and how investor psychology plays a huge role in driving markets. This is fascinating. We've got global economic anxieties, domestic political uncertainty, a major security breach, A&D, this interplay between tech and crypto, all feeding into Bitcoin's current dip. But where does that leave us? Should investors be feeling bullish or running for the hills? That's the million-dollar question. And to get closer to an answer, we need to dig into the evidence these experts are basing their predictions on. Let's start with Anthony Scaramucci, head of Skybridge Capital. He's bullish on Bitcoin, and his reasoning is particularly interesting. Okay, Scaramucci, he's not afraid to make bold moves, so I'm curious to hear what he's seeing. What's making him so optimistic? He's focusing on two key factors. First, he sees institutional adoption as just getting started. He believes the big players are only beginning to grasp Bitcoin's potential, and their investments will continue to drive up demand. So it's like the early days of the internet. Those who got in early saw massive returns. He thinks we're at that stage with Bitcoin. That seems to be his bet. But his second point is even more intriguing. He believes there's a real chance the U.S. government might establish its own strategic Bitcoin reserves. Wait, what? The U.S. government hoarding Bitcoin? That seems like a pretty radical move. It would be a huge shift, no doubt. Scaramucci's argument is that it makes sense from a strategic standpoint. In a world where countries like China are developing their own digital currencies, the US might see Bitcoin as a way to stay ahead of the curve. So it's not just about hedging against inflation, but also about maintaining global financial dominance in a rapidly changing world. Wow, that's a lot to unpack. But before we spiral down that rabbit hole, let's hear what Cathie Wood has to say about the long-term potential of blockchain. Excellent point. We'll dive into that and more in part 2 of this deep dive. Make sure to stay tuned. Picking up where we left off, Cathie Wood's firm, ARK Invests, they've done some really interesting research on the potential of blockchain. Like, they're not just looking at Bitcoin, but the broader applications of this whole revolutionary technology. Yeah, I've seen some of their reports. They really get into the nuts and bolts of the tech. Exactly. And what their research is showing is that blockchain, it has the potential to disrupt so many industries, obviously finance, but also supply chains, healthcare, and a voting system. Wow, so we're talking bigger than just Bitcoin. It's like a whole new way of organizing information and transactions. Exactly, and that's what's got investors like Cathie Wood so excited. They see Bitcoin as the first mover in this space, a pioneer paving the way for a whole new digital economy, like investing in the infrastructure of the future, not just a single product or service. That's a great way to put it. And that's why she's staying so bullish on Bitcoin, even with all the current market craziness. Okay, that makes sense from a long-term perspective. But let's go back to Arthur Hayes for a second. His prediction of a crypto peak in March. It just seems so soon, given the dip we're seeing. What's his reasoning there? He's looking at the bigger picture, the macroeconomic trends we talked about. He thinks these trends are actually speeding up, and they're going to create a perfect storm for Bitcoin adoption. A perfect storm. That sounds a bit ominous. Can you flesh that out a bit? What would that actually look like? Okay, imagine this. Inflation keeps rising, eating away at people's savings. Geopolitical tensions keep escalating, making traditional investments feel super risky. Trust in governments and central banks is eroding. Okay, yeah, I see where you're going with this. It doesn't paint a pretty picture. It doesn't. But Hayes argues that this is exactly the kind of environment where Bitcoin thrives because it's decentralized. It's outside the control of governments and central banks. Its supply is limited, so it can't be inflated away like traditional currencies can. Right, it's like a life raft in this sea of economic turmoil. Right. I could definitely see the appeal for investors who are feeling nervous about the traditional system. Exactly, that's his point. He believes that this rush to safety, combined with more and more people understanding Bitcoin's potential, it's going to drive a massive wave of adoption over the next few months. Hence his prediction of a peak in March. Wow, okay. So we've got Cathie Wood focusing on the long-term transformative potential of blockchain, and Arthur Hayes betting on a short-term surge driven by all these macroeconomic anxieties. Where does Anthony Scaramucci fit into all of this? Well, his prediction is interesting because it bridges the gap between those short-term and long-term perspectives. He sees the current dip as a buying opportunity, a chance to get in on Bitcoin before it potentially explodes in value. Classic buy low, sell high strategy. But what makes him so confident that Bitcoin will rebound that strongly? He's placing his bets on two main factors. First, the continued growth of institutional adoption. We already talked about this, but it's worth repeating. It's a major trend that's driving the market, right? More and more big players entering the crypto space, bringing in more capital and legitimacy. Exactly. And Scaramucci thinks this is just the beginning. He's predicting a flood of institutional investors pouring into Bitcoin over the next few years as they try to diversify their portfolios and protect themselves against inflation. I can see that. If you're managing billions of dollars, you can't ignore Bitcoin. With its limited supply and potential for growth, it has to be on your radar. Precisely. And then Scaramucci's second prediction. This one is even bolder. He thinks there's a real chance that the US government will actually start establishing its own strategic Bitcoin reserves. Okay, we touched on this earlier, but I still have some questions. Why would the US government, a government that's historically been pretty skeptical of crypto, suddenly embrace Bitcoin? Scaramucci's argument is that it's all about pragmatism. The global financial landscape is shifting. Countries like China are already developing their own digital currencies. So if the US doesn't adapt, they risk falling behind. Exactly. And Bitcoin, with its established network, its decentralized nature, its limited supply, it could be seen as a strategic asset in this new digital world. Okay, I can see the logic there. But wouldn't that also be a massive endorsement of Bitcoin? I mean, if the US government starts buying it, wouldn't that send the price through the roof? Almost certainly. And that's what makes Scaramucci's predictions so intriguing. If he's right, it could mean we're on the brink of a huge shift in the entire global financial system. Wow, that's a lot to process. So we've got institutional adoption, potential government backing, macroeconomic anxieties all swirling around. No wonder the Bitcoin market is so volatile. It's a roller coaster for sure, but that's also what makes it so captivating. We're watching the birth of a new asset class, a whole new way of thinking about money and value. It's like history in the making. But with all this uncertainty, it's tough to know what to do as an investor. Do you buy the dip? Do you wait and see? Do you just run for the hills? Those are all good questions. And unfortunately, there's no easy answer. The best advice I can give is to educate yourself, understand the risks and the rewards, and make decisions that align with your own personal financial goals. So no get-rich-quick schemes, no following the hype blindly. It's about taking a long-term strategic approach. Exactly. And remember, this is a marathon, not a sprint. The Bitcoin market is still in its early stages. There will be ups and downs volatility, but the long-term potential is undeniable. That is reassuring. It's easy to get caught up in the day-to-day fluctuations. But you're right. It's important to keep the big picture in mind. So we've explored the predictions, we've examined the evidence, but there's one more piece of the puzzle we need to talk about. The risks. You're absolutely right. Every investment has risks, and Bitcoin is no different. In fact, because it's such a new and volatile asset class, those risks can be even greater. So let's talk about those risks. What are the potential downsides that investors need to be aware of? One of the biggest ones is regulatory uncertainty. Governments around the world are still trying to figure out how to regulate Bitcoin and other cryptocurrencies. Right, we've seen some countries really cracking down on crypto, while others are taking a more hands-off approach. Exactly. And that lack of clarity can create a lot of uncertainty for investors. New regulations could be introduced at any time, and those regulations could have a huge impact on the price of Bitcoin. It's kind of like the Wild West out there. Investors need to be prepared for the possibility of things changing really quickly. Absolutely. And another risk to consider is the potential for fraud and scams. Because the crypto market is relatively new and unregulated, it's attracted its fair share of bad actors. Yeah, I've heard some scary stories about people losing their savings to shady crypto schemes. It's a reminder to be super careful who you trust in this space. Absolutely. Do your research, verify everything, and never invest more than you can afford to lose. And speaking of losing money, we have to talk about the volatility of the Bitcoin market. Right, it's not for the faint of heart. Definitely not. If you're risk averse, if you can't handle the thought of your investment dropping 50% overnight, then Bitcoin might not be for you. A strong stomach and a long-term perspective are essential. But what about security risks? We talked about that huge hack of the Bybit exchange earlier. That has to be a big worry for investors. It is. Security is a major concern in the crypto world because Bitcoin is digital. It's vulnerable to hacking and theft. And as we've seen, even the largest and most well-known exchanges can be targeted. So how can investors protect themselves? What steps can they take to minimize these security risks? One of the most important things is to choose a reputable exchange with a strong track record of security. Look for exchanges that offer two-factor authentication, cold storage, and other security features. And steer clear of any exchange that sounds too good to be true. If they're promising ridiculously high returns or guaranteed profits, that's a red flag. Absolutely. If it sounds too good to be true, it probably is. And remember, you're ultimately responsible for your own security. Take steps to protect your private keys. Use strong passwords and be careful about phishing scams. So do your research, be careful, and don't put all your eggs in one basket. Good advice for any investment, but especially in the crypto world. I couldn't agree more. Investing in Bitcoin can be exciting and potentially lucrative, but it's not without risks. It's important to approach it with your eyes wide open, understanding both the potential downsides and the potential upsides. This has been such an insightful conversation. We've covered so much, from expert predictions to macroeconomic trends to the potential risks. But before we wrap up this deep dive, I want to bring it back to our listener. Yes? Let's connect all of this